Hello traders, welcome to your fundamental market update for Tuesday the 3rd of March 2015. And we've recently had the Australian data come out, and importantly the RBA interest rate decision where they chose to keep rates left on hold. It's quite an interesting call by the RBA, as the comments were all very dovish except for the housing market, where the housing prices have been at all-time highs, and in fact on the weekend we had a house go for $1 million over the reserve price at auction. So it just shows you that things are getting quite extraordinary here in the Australian property market, and when things get so crazy, it's not sustainable, and something's going to happen in the future. As soon as interest rates start to rise, people will start to hurt, considering they've got a lot of debt. But as you can see here, building permits at just about an all-time high at 7.9%. Now that's massive, that's huge, and due to low interest rates, Australians are coming in and getting themselves into more debt because they can afford to, because interest rates are so low. But the uneducated will ultimately get burned when interest rates start to rise, possibly next year or whenever the Australian economy starts to show signs of support and improvement. So we've also got to chat a bit more about this interest rate being on hold, because the Australian dollar rallied initially off the news and continued to right into probably now the start of the European session. And that's just purely on the fact that people were anticipating that they would cut again to try and get the data that's weak back in check, because there's more important things than just purely the housing market. It seems to be that the RBA are focused and so worried about a housing bubble that they're letting the rest of the economy suffer as a result, because they've mentioned in their statement that growth remains well below pace, and the Australian dollar is above most estimates and the fundamental value in their eyes. They see further easing may be appropriate in periods ahead. Now that's the last statement they put in, so pretty much they're telling us that they expect to cut again, but they just didn't have the balls to do it this time. They want to wait to see more data and to see the effects of the last cut. So they're not really being proactive, they're just cutting, waiting to see if the last cut does anything, and if not, they'll cut again and then they'll wait. It's not really inspiring. Inflation is also being low. The economy has spare capacity. Unemployment is getting worse. China growth is slow, and China cut their interest rates to try and pick up their economy. I could go on and on and on with the poor data. Now, I think that the comment that is going to cap the Australian dollar rally will be the fact that they say the RBA sees further easing may be appropriate over periods ahead. Okay, so keep that in mind coming up. We also have the Australian GDP coming out tomorrow. Now, if this comes in weak, the Australian dollar will sell off, and it will emphasise the fact that the RBA should have cut rates, and the Australian dollar will end up being punished as a result of it, and people will start pricing in an interest rate cut for next month. So that's a key point to keep an eye on. Now, coming up in today's session, we don't have a lot moving forward. We have some gross domestic product for the Canadian. However, I don't think it's going to be a massive impact on the US versus the CAD. And the rest of the data is quite weak. We have some retail sales coming out of Germany. It's expected to come in weak, and if so, that will weigh on the euro dollar slightly. But I think overall, the market is now going to trade in line with technicals. So make sure you tune into the technical video, and we'll see if we can pick up some trades on the basis of what the price action happened last night and how the market's setting up leading into Europe. And I will be back again tomorrow as always. So until then, trade well.